This video is based on the technical analysis of the Dogecoin crypto, and at this point in time we find ourselves on the monthly chart. And what we'll do today is identify the market structure of Dogecoin, market patterns that we should be focusing on, key support and resistance levels, as well as levels at which we may potentially look for buy and sell opportunities. And so guys, let's not waste any further time and get straight into the actual technical analysis. And as I said, at this point in time we are on the monthly chart, and on the monthly chart the first thing that we can see is that the market had given us this double bottom over here. And you guys know that whenever we have these double bottoms, we want to see price closing sufficiently above the neckline, and then in future coming back to the neckline to give it a test. And where we have that neckline is where we would look for potential buy opportunities, especially if the neckline aligns with any key numbers on the Fibonacci retracement tool. So I'm just going to add my neckline for now, and just also remember that necklines, once they've been broken, they become very strong levels of support, right? And that's why I say that once price closes above the neckline and then comes back to the neckline to test it, at that level is where we would look for potential buy opportunities, as it is a very strong level of support. As you guys can see, as we would have had multiple rejections in and around that area, and if the area aligns with any of the key numbers that we have on the Fib tool, we would then look for potential buy opportunities, right? Another thing that is also very much important that I want to bring to your attention is that as much as I'm saying that we had this pattern, and at this point the anticipation is for the market to close above that neckline and then come back to the neckline to test it, and at that point is where we would look for potential buy opportunities. Just also bear in mind that the market had given us this overextended double top or M structure, and just like with W structures, whenever we have these patterns such as the overextended M structure or double top, we want to see again price closing sufficiently below the neckline, head up to the neckline to test it out, and at that point where the neckline is where a lot of us would look for potential sell opportunities, especially if that neckline aligns with key numbers on the Fibonacci tool. And guys, we can also see that as I said, the neckline of this double top is here, right? I'm just going to add that neckline as well. Just bear with me. There we go, more or less, right? And remember guys, I said that when we have these patterns, we want to see price closing below the neckline and then heading back up to the neckline to give it a test, and at that point is where we look for potential sell opportunities. And that's exactly what happened, where we saw the market closing at this point below the neckline, and then in future it went back to the neckline to give it a test and then push further down. At this point in time we can see that the market is also at that very strong level of resistance, which is also the neckline of that double top. And as much as I'm saying that we may potentially start looking for buy opportunities, it is also quite possible that because price is at a very strong level of resistance, as we had multiple rejections at that point, in addition to that, that level is the neckline of this double top, we may potentially see the market at this point actually move further down, right? And why do I say so? I've given the reasons why, but another reason is that remember we had this double bottom, and whenever we have these double bottoms, what happens quite a lot is that traders and investors buy on the second leg and they place their stop losses below. So at this point in time we have a lot of stop losses located here, and those stop losses represent liquidity, and as I always say, liquidity is money, and that money needs to be triggered by the market at one point or another. So it is quite possible that we may see price from where it is actually move further down to trigger all of those stop losses, and then once that's done, we may then again see the market move further up. So what am I saying? What I'm saying in other words is that we need to be careful. I know that the crypto space seems to be booming at this point in time, mostly due to the fact that Bitcoin itself is very much strong. As much as that's the case, remember that the market, as I've said, is at a very strong level of resistance at this point, as we've had multiple rejections there. And the very same area is the neckline of this double top, and we may potentially see the market move further down to trigger the stop losses located here, and then the market may potentially again give us a double bottom and then continue to move further up, right? But what else do we see on the monthly chart that we should be paying attention to? At this point I don't see much. I'm just gonna head down to the weekly chart and let's have a look. And just to recap, guys, remember on the monthly chart we spoke about how the market had given us this double top here, which has a neckline there. To add to that, the market had also given us a double bottom here, which similarly has a neckline here. So what this means is that buying or selling where price currently is very, very tricky, as the market may go in either direction. And that is because, guys, remember I said we have a double top, right, as well as a double bottom, and they both have necklines in more or less the same area, which means that the market may continue to move further down or continue to move further up. So buying or selling here, which is over here, is actually very, very risky, right, as the market may go in either direction. But anyway, here we are on the weekly chart. What do we see on the weekly chart? Another thing that I see on the weekly chart is that we have, just bear with me, let's see. On the weekly chart, we have, let me just zoom in a bit and have a look. So on the weekly chart, we have, let me just do this quickly. We have this area over here, or that candlestick, and it is a bullish candlestick with a small body, right, and a very long upper wick. So it tells me that we have a lot of money stuck where that wick ends or starts at the top, right, and we may potentially see the market actually continue to move further up to grab that liquidity. But having said that, remember I said that the market is at a very strong level of resistance, and we can also see that the current weekly candlestick is bearish at this point in time, and it's giving us signs that we may potentially start to see the market move further down, right? Having said that, I'm not saying that the market is moving down. I'm saying that it's giving us signs that we may see the market start to move further down. But what else do we see on the weekly chart? I don't see much. I'm just going to head down to the daily chart, and here we are on the daily chart. And again, remember guys, on the weekly chart I said that we have here that one bearish candlestick, and I said that it's giving us signs that the market may start to move further down. But now that we're on the daily chart, we have more signs that the market may potentially move further down, and that sign, one of those signs, is this double top over here, which has a neckline there, right? I know that a lot of people, or rather a lot of traders and investors, have already sold at that point, and they've sold because price is at a very strong level of resistance, which is, remember, the neckline of that double top we spoke about. To add to that, we can also see that the market has given us a double top here, right? And as I've said, a lot of traders and investors actually sold at this point and placed their stop losses just above, right? And others are actually waiting for the market to close below the neckline, which is over here, of that double top. And once price closes below that neckline, more traders will be looking to add onto their trade, to their sells, and try to push the market further down, right? So at this point in time, all I'm saying is that we need to be careful, as we may potentially see price, move further down. And just to go back to the weekly chart, remember I said to you guys that because we had this huge double bottom, and that whenever we have these patterns, a lot of traders and investors actually buy at that point, or buy that point, and they place their stop losses below. It is quite possible that we may see price come back to trigger all of those stop losses and then potentially move further up, right? So we have a lot of stop losses located here, and we may see price come back here to trigger those stop losses and then potentially move further up, right? So that is it as far as my analysis goes. But let me just go down to the H4 chart and let's see what's happening down there. Just bear with me. Let's have a look. Right. And in regards to the H4 chart, we can see that the market has been moving choppy, we could say, right? But just remember that on the daily chart, the structure has expressed itself as a double top, and people sold there, placing their stop losses above, and others, as I said, are waiting for price to close below the neckline. And once price closes below the neckline, a lot of them will be looking to sell and push the market further down, right? I don't see much really as far as the H4 chart goes. All I'm saying is that we need to be careful in as far as buying goes, as we may potentially see the market move further down.